to happen because there's no other. We're squeezed so tight right now that there's no place for it to go.
Thank you, Mr. Chairman. I yield back.
Ms. Clarke.
Thank you very much, Mr. Chairman. Thank you, Ranking Member Velasquez, and I'd like to thank our panel for their insightful testimony today. We all understand only when all of our nation's small businesses are active participants in a robust recovery that adds jobs will our nation fully recover from the recent economic downturn. I also understand that allowing the regulatory environment to return to one that allowed for the financial collapse in the first place is irresponsible at best. Today's testimony, especially that of Mr. Jacoby and Mr. Kotler, illustrate the difficult task facing our nation with the lack of consumer spending highlighted as the top concern of small business owners with regards to hiring. This fact itself feeds back into the anemic consumer spending. The fact that lenders are not lending even to those who would otherwise be deemed creditworthy has led to the issue that Ms. Ozer pointed out regarding the 7A program approaching its ceiling later this year. So my question is this: given that there's a need and also recognizing that returning to lax regulatory environment that caused our current problem would be unwise, what else is needed to incentivize private lenders to free up the capital that would allow small businesses to expand and hire, which in turn would turn around the weak consumer spending and get our economy back on track?
That's a really tough question. I think there are a lot of things that could be done that would encourage local lenders to hold more loans. Everybody who's tried to figure that out has had some difficulty in terms of how to do that effectively, and you've tried with various kinds of programs. You know, the big thing is to try and get consumer spending again, and that's a larger issue. Once that happens, then everything turns positive. If in the interim you can figure out a way to get lenders to hold more loans themselves instead of the government programs, but get more loans in some kind of incentive way, that would help also.
Yes.
I think that, you know, utilizing the government programs is helping us to do that. But even at that level, I agree with Dr. Jacoby in the fact that the consumer confidence and the consumer spending is all hand in hand, and that's all tied up with more jobs, more disposable income, and so forth. So if we can continue to try to get the money out there, businesses that hire people, then the outlook will go on. But it's a very difficult situation, and I tend to agree with him that until the home level, the values in their homes comes back, and they have confidence that they're not going to lose their homes, and that's their priority, is where they live, and that they have jobs and money to put on the table. When that comes back, I think that the banks are doing everything they can with the tools that they have to get money out there to small businesses. I know that in our bank, you know, someone else asked about the foreclosure rate. If the people are paying on the loans, we're working with them and not foreclosing, even though they've been downgraded, because the regulators are forcing us to downgrade because the LTVs aren't there. But if the loans are being paid, they're still in the bank. So, you know, the banks are trying to work with the people that they have lent money to keep the businesses going, to keep people employed, to keep people spending money. It's just a cycle.
Okay. Mr. Kotler, did you want to? I mean, you're a Capital One. You got to have the answer.
No, now I'm going to.
What's in your wallet?
That's right.
It's not there.
I'm not there anymore, but I did work at Capital One. But you know, it's interesting when you watch borrowers. So in a robust economy, you see borrowers coming in and they want working capital lines of credit to hire new people, to fund new contracts. They want to purchase new equipment, which then leads to more people to run that equipment, to more jobs. Coming out of the bottom of this recession, what we saw was we started to see loan demand go up, but it was for things like, I want to buy the building that I'm in because I've been leasing it and now it's worth less and I can get a good deal on it. I want to I want to buy my competitor who's weakened and not do that. And those things, those kind of loan requests don't necessarily create jobs. So as we get more consumer spending and we get more economic growth, then we'll start to see those kind of loans from established businesses be the kind of loans that say we're willing to commit and expand. And that's not, we've seen less of that up to this point.
Did you want to add anything at all, sir? Yes. Okay. Well, I'll yield back the balance of my time. Thank you again.
Well, I want to thank all of you for participating today. And this committee is going to, this committee is about job creation and helping small businesses. And we're going to do everything we can to try to make sure we do what we can to provide access to capital for those small businesses, particularly the